You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 20th day of December, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. Now that's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in a little bit, he'll walk you through step by step how to take the trial. We'll get your indicators set up and indicating today. You'll have the weekend to fool around with them. Then it gets tricky because we're only going to be here next week, Monday, Thursday, and Friday. So we'll give you another 2 days the following week so that you get a full 5-day free trial. Sound good? Great. All right. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back at 12 noon Eastern for this broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the form, and you're done. Going forward, what will happen is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of that is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be times when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember. youtube.com/CFRN. You already know the YouTube part, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. But, like I say, if you're new to our little corner of the world, you might find it interesting to see how we've evolved over the years. Just pick some days at random. youtube.com/CFRN. Our schedule every afternoon, we start with our daily devotional, a word of prayer, a little bit of global news, market news, recap of the Logic 247 alerts, the concierge trade alerts, and then about 50 minutes in, Michael will join us, give us a recap of what happened this morning in the live trading room. Then we'll do about a half hour of live trading on the TradingView platform, and then I'll wrap things up with our good word for the day. Now, the topic of the devotional that we're in right now is strengthening your faith with the heavenly gifts. Our scripture today is Luke 10, verse 21, and I'm going to share it from the Message translation. At that, Jesus rejoiced, exuberant in the Holy Spirit. I thank you, Father, Master of heaven and earth, that you hid these things from the know-it-alls and showed them to these innocent newcomers. Yes, Father, it pleased you to do it this way. Luke 10, verse 21. Now, yesterday we talked about asking for the various gifts. The day before we covered the 9 different spiritual gifts. Today specifically we're going to talk about asking for the gift of wisdom. Jesus expresses joy because God reveals his wisdom not to the wise of this world, but to those who have a simple and open heart. Asking for the gift of wisdom is therefore a request that comes from humility and the desire to know and follow God's will. It is not just about understanding things in an intelligent way, but about having a spiritual gaze that goes beyond appearances. The gift of wisdom allows you to face everyday situations with God's heart and mind, helping you see things as he sees them. This gift offers you special guidance, inspiring you to make the right choices, to recognize the good, and to have a deep understanding of people and events. When you ask for the gift of wisdom, you do so because you know that alone you cannot always see clearly. But God can guide you and enlighten you. Pray with me. Heavenly Father, thank you for revealing your truth to us through the simplicity of faith. Just as Jesus rejoiced in the Holy Spirit, we too praise you for your wisdom and grace. Help us to trust you with childlike faith, embracing your will with joyful hearts. May our lives reflect your love and bring glory to your name. It's in Jesus' name we believe and pray, and everybody said, amen. Amen, and happy Friday. Well, quite a turnaround today. To be expected, that's kind of how markets work. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 774 points, almost 2%. The NASDAQ up 351 points, almost 2%. S&P 500 up 104 points, 1.75%. And the Russell 2000, our man in the street, up 40 points. Almost, you guessed it, 2%. In the commodity basket, crude oil is basically unchanged on the session. Gold is actually up today, $35.50, trading 26.4360 last. That's a gain of almost 1.5%. And silver up 53 cents, trading 29.94 last. That's a gain of almost 2%. In the Asian markets at the close, the Nikkei fell 111 points, Shanghai dropped 2, Hang Seng fell 31. And in the European markets at the close, FTSE down 20, DAX down 53, CAC down 19. So we had a red day in Asia. It was a red day for the UK. And so far, it's a big green radio Friday here in the US of A. So let's go to the news. Now, I got 2 news articles that are going to talk about basically the same thing, but in a little different way. The House of Representatives last night voted down a stopgap funding bill backed by President-elect Donald Trump, pushing negotiations into the final 24 hours before tonight's midnight deadline. The vote came after Trump opposed a bipartisan continuing resolution featuring add-on bills. Now, the graphic of this is incredible. I wish I had it to show you. The original bill submitted was 1,500 pages, right before everyone's going home for the holidays. Now, this is the oldest trick in politics. It was like Obamacare. Nobody's going to take the time to read all that. Well, somebody did. Vivek Ramaswamy, pretty smart guy. He read the whole thing. He said, no way. And so they submitted a counter proposal. I think it was about 150 pages. 1/10 the size. I mean, it showed a picture on the news of this huge stack. That was the original bill. And then this little tiny stack, which was the compromise bill, which it got voted down too. So, I mean, there was so much insane pork funding in the original bill, the original budget. Why even use that word? And you know how many government shutdowns there have been since 1970? 27, I think. Do you remember a single one of them? I don't. 38 Republicans joined Democrats to vote 235 to 174 against the president-elect's new plan. The proposed resolution tied 3 months of stopgap funding to a 2-year suspension of the debt ceiling and included aid to farmers as well as $100 billion in disaster aid. The plan's announcement followed Trump's calls earlier in the day for the permanent repeal of the debt ceiling, a century-old rule capping how much the Treasury can borrow. The U.S. debt has risen to roughly $36 trillion after the ceiling was suspended from June 2023. That suspension expires January 1, 2025. A federal government shutdown would furlough millions of workers, though essential services like the military and air traffic control would stay open. Now, I got another article with a little different take on this, so I'll share that in a minute. Dominique Perlicotte was convicted and sentenced to 20 years in prison yesterday for the drugging and rape of his wife, Giselle Perlicotte. The judgment caps a nearly 4-month public trial likened to France's Me Too movement. Dominique and Giselle, both of whom are 72 years old, had been married for 50 years when police revealed Dominique had drugged and sexually assaulted Giselle from 2011 to 2020. Dominique had also invited at least 50 other men to participate and admitted to placing anti-anxiety medication in Giselle's food to facilitate the assaults. The men between the ages of 26 and 74 were each convicted of at least one charge yesterday, with sentences ranging from 3 to 15 years in prison. Who could do that to their wife of 50 years? Giselle opted for a public trial to shed light on the issue of sexual consent in France. The decision to waive anonymity propelled Giselle into the spotlight, with many heralding her as a hero. That's just creepy. A machine learning program was able to meet or outperform professional tasters in identifying whiskey notes, according to a new study. The demonstration marks a milestone in sensory perception using artificial intelligence. Data analysts tested their program on 16 whiskey samples, 7 American, 9 Scotch, previously categorized by 11 human experts. The program, using statistical models and neural networks, identified molecules in each whiskey and used them to predict the sample's top 5 flavor notes. Researchers compared these findings against the top 5 flavor notes aggregated from human experts' descriptions. This type of analysis has historically been challenging. While some chemical mixtures like vanilla are directly associated with a specific aroma, others like whiskey can rely on over 40 compounds. Notably, the program found molecules like menthol and citronella unique to the American whiskeys and associated with caramel-like notes. I'm not even going to try it. And heptonic acid unique to Scotch whiskies were more likely to be associated with apple-like or solvent-like notes. Are the machines getting smarter than us? I don't know. The United States government could be headed for... Now, oh, by the way, I don't know if you saw this, but Kamala was headed to LA for the holidays, and Biden was headed to wherever he goes, and they both came rushing back to the White House. Kamala, I think she just came back, but Biden had a full-blown motorcade with the cops on the motorcycles and all the stuff, all the pomp and circumstance. But nobody has said why they've come rushing back. Of course, everyone assumes it's because of the looming government shutdown. Ooh. Maybe they just didn't want to be accused of being on vacation when the government shut down. Or maybe it has to do with the drones. I don't know. First Speaker Mike Johnson and his colleagues saw one bipartisan deal fall apart amid opposition from Elon Musk and President-elect Donald Trump. Then a second GOP negotiated deal collapsed due to 38 House Republicans joining nearly all Democrats to vote no and tank that effort. You see, this whole thing of reducing government spending, which by the way included a $6,000 raise for themselves, that got taken out. And they said, we're not going to vote for that. We need a $6,000 raise. Now, if I'm not mistaken, the people that lost everything in North Carolina, what did they get, a $600 check? But these guys need a $6,000 raise. Also, they want to be able to opt out of Obamacare. That was taken out. They also said, no, we're not going to vote for that. We're sick of this Obamacare. So, here we are, waiting on midnight. Johnson and his colleagues are still working feverishly to resolve a complex series of disputes on issues from the debt ceiling to various funding priorities, but now have only hours to act to head off an array of impacts that could be felt across the country, as well as economic impacts that could grow with each passing day. Remember, there's been 27 government shutdowns since 1970, and chances are you don't remember a single one of them. We will regroup and we will come up with another solution, so stay tuned was all Johnson was able to offer reporters after Thursday's latest failed vote. For now, experts are downplaying the immediate economic effects and noting that lawmakers have intense motivation to find a deal and then get home for the holidays. Nobody wants the optics of shutting down the government, according to a policy strategist, Brian Gardner. But with few options left, what could be a growing economic question for the coming days is the length of any stoppage, especially in the middle of the holiday travel season. Excuse me. I'm not going anywhere, so that won't affect me. Okay. The Consumer Financial Protection Bureau, or the CFPB as we call it, sued JP Morgan and Bank of America and Wells Fargo, along with the parent company of Zelle, alleging the firms rushed a peer-to-peer payment network to market without first implementing adequate consumer protections. Well, I've used Zelle a lot, and I haven't had a problem. Not to say that there aren't problems. By their failing to put in proper safeguards, Zelle became a gold mine for fraudsters, while often leaving victims to fend for themselves. Now, that makes me mad. The Zelle spokesperson said the CFPB's actions are legally and factually flawed, and the timing of this lawsuit appears to be driven by political factors unrelated to Zelle. The CFPB also claimed that fraud complaints were addressed, with consumers largely denied relief when they went to their banks, according to a lawsuit filed in the U.S. District Court for the District of Arizona. Representatives for JP Morgan and Bank of America did not have an immediate comment, and a representative from Wells Fargo just simply declined to comment at all. Now, I think what we're going to find when this whole thing unfolds is that senior citizens are the ones who've been taken advantage of. And that just breaks my heart. But if you've ever used Zelle, it puts up a huge warning before you send the money. Are you sure you know this person? Are you sure you want to send this money? I mean, and then they They show you what you're doing. You're sending this much money from this bank account to this person. And I mean, but you know what? A lot of Americans, because we're living longer today, aren't very tech savvy. And if some scamster can get them scared through a text message or an email or even a phone call, it's pretty easy to pick their pockets. So, while Zelle is handy, if they're not making people whole, either the banks or Zelle, if they do get ripped off, even though, you know, it clearly says, make sure you know what you're doing and who you're sending this money to. But these scamsters, they text and say they're the IRS, they're their bank, they're their this, they're their that, and, you know, people get afraid. And these scammers are very good at what they do. So if you have someone in your life who still handles their own financial affairs, but is getting to that point where you need to put in some checks and balances, that would be the greatest Christmas gift you could give them. And you got to be gentle, because you're trying to help them, but you don't want to hurt their feelings. So, anyway. President-elect Donald Trump transferred about $4 billion worth of shares in his media company to a trust that is controlled by his eldest son, Donald Trump Jr. The soon-to-be president, who was the largest Trump Media and Technology Group shareholder, with nearly 115 million shares, will now directly own 0 shares and be the trust's sole beneficiary. This is all according to a filing with the U.S. Securities and Exchange Commission. According to a separate filing last night, Donald Trump Jr. has sole voting and investment power over all securities owned by the trust. The move is similar to the approach Trump took in his first term on the conflicts of interest that his sprawling real estate empire posed. Instead of divesting his assets, Trump put them into a trust managed by his 2 eldest sons, Trump Jr. and Eric Trump, as well as Alan Weisselberg, a longtime executive of his business. Critics, including Walter Schaub, then the director of the Office of Government Ethics, argued the arrangement didn't eliminate his potential conflicts. They said Trump was still aware of which assets were held by the trust, those running it weren't independent, and his companies continued to do business benefiting him financially. Yeah, well, what about Nancy Pelosi and her insider trading? And all the other congressmen that are inside traders? Now, Trump wants to put a stop to this. And I can't even believe there isn't a law against this. Maybe there is. Maybe just no one bothers to enforce it. I mean, when you know some company is about to get handed a giant government contract, I mean, even if you don't call your own broker and say, hey, buy me 100,000 shares, you could pass a note at dinner to your brother telling him to go buy the 100,000 shares. Do you follow me here? Something, the hole's so big, I don't know how they shore it up, honestly. I usually have an answer for everything. I don't. House Speaker Mike Johnson this morning strategized with lieutenants on how to rush a spending bill through the chamber ahead of a midnight U.S. government shutdown deadline after the legislation backed by Trump failed yesterday. The last-minute haggling over details, which were not yet finalized, came as Trump advisor Elon Musk continued to threaten a government shutdown if the incoming administration did not get what it wants out of the House Republican majority. I say shut it down. Musk posts on social media, either the government should pass sensible bills that actually serve the people or shut it down. Shut it down. Manifesting. Are you familiar with that term? Visualizing the success you want to achieve, or as they call it, manifesting, took off this year. Go online and seemingly everyone is making vision boards, writing down their goals repeatedly and saying them aloud like a mantra. Now, this crap all started back with The Secret. I'm sure you've seen that. Singer Dua Lipa swore by it to achieve big goals, and Cambridge Dictionary named manifest its word of the year. In the first 8 months of 2024, there were more than 130,000 searches for it on the dictionary's website. On TikTok, the hashtag manifesting has 1.6 million posts, and manifestation has 6.5 million posts. Some psychologists say its current meaning, which involves visualizations and affirmations to make something happen, can be traced. Oh, I didn't know this was coming. Can be traced to the best-selling 2006 book, The Secret. Yeah, there's a video on YouTube too. It's just somebody reading the book. Its recent resurgence reflects a desire for people to exert control over their lives, even when the outcome might largely be out of their hand. Now, there is a classic that's been around a lot longer than The Secret. In fact, I read the whole book on this show, day by day, over a period of months. Gosh, now the name of it. As a man thinketh, so he is. Is that the name of it? I think it is. Anyway. Happy manifesting season. Finally from Reuters, Chicago Federal Reserve President Austin Goolsbee said on Friday today he now projects a shallower rate-cutting path in 2025 than he had previously. Well, they already said they're going to whack it from 4 to 2. Now we only get 1. But added he still believes the U.S. Central Bank's policy rate will fall a judicious amount next year. The uncertainty about policy makes it particularly hard to make estimates of what the neutral rate is and what the inflation rate is in particular. And so that's part of why I'm a little shallower on the rate path for 2025. He did say, however, that inflation still looks like it may be headed to the Fed's 2% target. You know my feelings. Abolish the Fed. Our founding forefathers never wanted it, never intended it, warned against it. I said this yesterday, I'll say it again. If you haven't read The Creature from Jekyll Island, Google it. Google it. The copyright is expired, so you can read it for free on the internet. You can Google up a free PDF. The Creature from Jekyll Island. If you haven't read it, you don't understand what a criminal cabal the Federal Reserve is. And it has absolutely nothing to do with the government. It is a privately owned corporation that prints money and loans it to the American people at a very fair interest rate. All right, enough of my whining. Local news. Logic 247, our 24/7 around-the-clock E-mini alert service. We're in week 333. Over the last 333 weeks, we've issued over 18,700 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did this recap this morning at 6:30 a.m. Eastern, so some things have changed since then, and I've published some additional alerts, so she'll wrap it up for the week this afternoon or tomorrow morning. But at the time she did the recap this morning, since the markets opened this past Sunday night at 6 p.m. Eastern, they issued 58 logic alerts, 2 never triggered, still waiting on 8, 48 actionable alerts, of which 3 or 6% would have been stopped out, again based on market structure, and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, of the 18,700 plus alerts that we've issued over the last 333 weeks, everyone has an entry price, an initial target, a second, a third, sometimes a fourth or fifth target, and then a final trade to target. Yes, you can trade them, but that's not why they're created. They're created to help you learn to read a chart. If you use them properly, pretty soon you won't need the alerts. Within a couple months of becoming a passport holder, you should be able to look at any chart, any market, any time frame, and with our humble set of indicators, instinctively know what the next high probability move is. And if you use the logic alerts, not just to trade, but also to learn, you'll be able to look at any chart, any time frame, and know where the next logical resistance is, the next logical support, and you'll see the window of opportunity in between. And once you see it, you can't unsee it. And once you learn it, no man can ever take it away from you. Also, the logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., as opportunity presents itself. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. They're a little bit different. Number one, they don't come out around the clock. They're posted each evening shortly after the Globex open. Last night I didn't get them out till 7 p.m. Eastern. Globex opens at 6 p.m. Eastern. Now the previous day I got them out at 5:55, 5:55, 5:55, 5:55, 5:55. You get the idea. But I've said all along that I can't promise you I'll always be able to do that. On the days that I can, I posted a note in the discussion group. CTAs will be out at 5:55. That way you're prepared when the market opens. You've already looked at your charts. You've already got your horizontal lines on. Yesterday I actually posted I won't be able to get the alerts out at 5:55 today. And then when I got back to the office, I put a post in the discussion group that says the CTAs will be out sometime within the next 20 minutes. So just want to give you a heads up so you can put them to good use. Now, if you're a member or trial member, be sure to read this information. It's important. You need to know it. You need to understand it. If you don't understand it, ask me. I'll explain it. Okay? So, last night, 1 hour after the markets opened, all of our members and all of our trial members had every one of these targets. S&P 500 E-mini, the Dow, the Russell, crude oil, NASDAQ, gold, silver, and bonds. 1 hour after the open. So, that brings us to the daily chart. Now, how many of you were in the workshop last night? The members only workshop. Rico, I hope you're here in the audience or got the message I sent you this morning. I highlighted right here where the step line crossed red and falling. And as the step line crossed red and falling, it turned it to blue and climbing. I said that is a important price, important area. And I said if the market starts to drop, now the Friday candle had already started last night, okay? But it was barely a speck. Now I want you to look where price dropped to. You see that? I haven't really taught this, but you should be able to. Step line crosses and you go from red to blue. Mark that area. It's going to be important in the future. Okay? See, it crossed. Right where it crossed, it went from red to blue. Anyway, enough of that. So, what happened? Price dropped like a rock right to that spot. And now it's bounced all the way back up to the step line. Just as we're about to get a bearish cross. And look where the BBC is. Remember I said if the market does recover, the underside of this trend line that I had drawn, and this is exactly why I left it. See, you've got red and falling about to cross the BBC. That's a big deal, a bearish cross, okay? Now, as price moves up to the BBC, we expect that to be resistance because the pullback holds more often than not. Throw in red and falling, now you got two reasons. Throw in the 50% fib extension, you got three reasons. Throw in the trend line and you got four reasons that the market should find support or resistance, in that area right there. It's all coming together. But first, price has to overcome the step line. Okay? It's in the process right now of trying to overcome the 38% fib extension and the step line. If it does, I believe it'll make a beeline right up to this area. And I do believe we'll find resistance. And I do believe we'll get another leg to the downside. Now, just because I was right last night doesn't mean I'm right today. You got to embrace all possibilities. Anything can happen. Now, all alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And they say if it's not broke, leave it alone. So I've done that. Now, remember, this was the opening candle, 6 o'clock, 6:30. It was at the open of this candle, 7 p.m. Eastern, that these targets got published. Okay? So from 59.34 down to 59.09. Hey Siri, what's 34 minus 9? Oh, it's 25.
Minus 9 is 25.
Yeah, okay. I got it right. Hey, me. All right. So we hit it. Support. Bounces up to the BBC. The pullback holds more often than not. So we get another leg to the downside. Buyers come in right here. Take us up. Red and falling turns to blue and climbing. And off we go on a mad run right up to the long target at 59.86. Now, this was the lowest weekly trading zone for the week. Now, back over here on Wednesday when the bottom fell out and we blew through the lowest weekly zone, it was hard to fathom, but I did say it, I guess, yesterday, that based on 15 years of history with the weekly trading zones, which are published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. I said based on 15 years of history, we still expect price to be at or above the lowest weekly zone by close of business on Friday. And lo and behold, here we are. Now, we haven't closed for the day yet, so, things could change, but well, I get such a kick out of this. I don't know if anybody else does. The Dow. Oh, the Dow. It's trying so hard to get above that lowest weekly zone. Here's where we opened, well, let's see. 6 o'clock, 6:30, 7 o'clock. Okay, so CTAs came out at 7 o'clock at 42,769. That was the opening price. And we dropped to 42,640. That's about 100 points. $500 per contract traded. Bounced up to the BBC. The pullback held, sent us back down to and through the target. Then red and falling turned to blue and climbing. And off we go. And look at this beautiful parallel. Okay. Price, step line, blue and climbing, BBC. I call it the perfect stack. Now, it's not lost on me that the step line is kind of angling to the right a little bit. Not much. Takes a trained eye to see it. You can see it. When the black step line crosses to the right side of blue and climbing, that's typically an indication that price is going to retrace back to the BBC. So is it possible that we could actually close below the lowest weekly trading zone this week? Yep, it's possible. It's also possible that we'll get a little Santa Claus rally going and move higher. Because this thing, it hasn't crossed yet, but boy, it's right on the precipice. If we were to just consolidate sideways for a couple more 30-minute candles, then that would pull the step line to the right side of blue and climbing. The Russell, lowest weekly trading zone. But look at this. Step line's trying to cross. Although we did make it back, after being pretty far below. I mean, we were here, and then we dropped all the way to here, and now we're. I'm not ashamed of that. Okay, market opened here. Here's 6:30. This is where the CTAs were published. The opening price was 23.4280. We'll just call it 23.42. Down to 31. That's 11 points. Only takes 2 points to get your goal for the day. Then we found support here. If you go look way left, you can find out why. That bounced us up to the BBC, pulled back hell, sent us back down a little bit lower. Then red and falling turned to blue and climbing, and off we go. You hit the long target, keep going all the way to the zone. And that lowest weekly zone became resistance just like it did yesterday. Now the step line is definitely leaning to the right, but this candle is desperately trying to print green. So we could end up this week, because of what happened with the Fed on Wednesday, we could end up with a number of markets closing below the lowest weekly zone, or we might not. The NQ. Okay, that's 6 o'clock, 6:30. This was the opening candle. It opened at 375 and dropped 60 points. That one candle right there is worth $1,200 per contract traded. If you've earned the right to trade 10 contracts, that's 12 grand in that one 30-minute candle. So then we traded through the target, pulled back up. We didn't quite make it all the way to the BBC or the target, which the underside will often become resistance. So down we go lower. If you really want to learn how to trade, go look left and see why. The reason's there. It's in your chart. Red and falling turns to blue and climbing, and then we get a rocket ship. That's the lowest weekly trading zone for the NQ, and we're almost up to the one above. So I feel fairly confident, even though the step line is leaning right, that we will close well above the lowest weekly zone, as we have done the majority of the time over the last 15 years. Crude oil, we're on the G contract, if you didn't know. So 637, we got to the zone and we consolidated. Only three things happen when price encounters a weekly trading zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time the slice. Consolidation can look like this, it can look like this, it can look like this. When price rises to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support till proven otherwise. Now, keep in mind that these particular zones were created for the F contract. I failed to roll over Sunday night when I published the zones, or did the zones, so I didn't realize it till midweek that I had screwed that up. But yet, important prices, important areas are just that, important prices, important areas. So we got about halfway to the target, retraced back to resistance times 2. The zone itself and the BBC. That sent us to blue and climbing, that sent us back to the same resistance, and then we dropped to and through the target. This candle here opened at 68.88. Now it traded through, so it only gave you 8 ticks to the target, but it did trade through, so you could have got your goal for the day on that one candle. Market found support, bounced us back up to the zone, consolidation, sent us back down to the target, then blue and climbing has taken us almost all the way to the long target. See that bearish cross? When the red line gets below the green line, that is called a bearish cross. And when you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. We didn't quite get there yet. We got to 69.66. Trying to get to 69.75 to fulfill that. It's a pretty reliable indicator. So gold, we dropped. Now let's see, this is 637. This would be a 730 candle. That one opened at 26.08 and dropped to 26.05. So it's $300 per contract traded. And then we got above the BBC, took out the long target, and made it all the way back up. We made it through this zone, all the way to this zone. But now see how that step line's crossing. Look for price to retrace to the BBC. Silver, we came right down, hit the short target, consolidated, and then turned right around with blue and climbing and ran right to the long target and consolidated. Where? At the bearish cross. All right, Michael is here. He's going to share with us what happened this morning. Hey, Michael, this is what I was talking about last night. Remember when I drew this? Where the step line crossed, and it was the very spot where red and falling turned to blue and climbing?
Yep, I remember. Kyle had asked about that. I think it was Kyle asked about it last night.
It was Rico, I think.
Oh, Rico? Was it Rico?
Yeah, it's Rico. So, anyway,
good.
That does it for me, guys. Michael will now take good care of you. I'll be back in about 30 minutes, and we'll wrap the week up with our good word for the day.
Excellent.
And Michael is going to walk you through step by step how to take the free trial. Okay, really is free, no credit card required. He does it every day, so
I do it every day.
And next week's a wonky week. I've let him know that we're only going to be here Monday, Thursday, and Friday, but that we'll make sure they get 5 trading days in the trial. So
yes, let me do something really quick. I want to update the site really quick with the information that Val gave me last night.
Okay.
That I started to do last night, but I didn't finish doing. So let me do it right now. It'll take me just a minute here.
Okay.
And I'll get things all updated. And then when you click on the link, we'll bring you to the right place. And I'm halfway there right now. Paste that. And say done. And scroll down here. And paste that. And say done. And publish.
Boom, baby.
And there it is. Well, it will be in a second. It's almost finished. Just a moment, it says. Just a moment.
Please hold.
Let's take a moment. Please hold. Please hold. Okay, it is done. Thank you for holding.
All right.
All right.
All right.
So let me refresh this page.
Okay.
And get rid of that registration page. And now I click on that. It brings you to the right page. All right. I'm ready to go.
You're looking good.
All right. Here we go. Good afternoon, everyone. Happy Friday. Today is the 20th day of December 2024. Christmas is 5 days away, and I haven't bought a single Christmas present yet. That's not true. Well, I bought a whole bunch of things that I'm counting as Christmas presents. But anyway, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here and sign up for the free trial. Right, there is no credit card required for the trial, as Dwayne was just saying a minute ago. When you click on that, it's going to bring you to this registration page that I just updated. And on this page, all that we ask for is your name, your email, and your phone number. All right, your name, your email, and your phone number. In this form right here, there are 5 multiple choice questions. Just answer those multiple choice questions. And then down here at the bottom, if you have a Ninja Trader and you want to use Ninja charts, give us your machine ID. However, if you're just going to trade on Ninja, we don't need the machine ID. Okay. we do use TradingView charts, right? So you're going to want to get, you are going to want to get TradingView, right? If you don't have TradingView, there is a 30-day free trial to TradingView. To get that, go here to mytradingiq.com, click on Trading Platforms, and sign up for the TradingView right here. Click on this link right here. That's all you need, right? That'll bring you to this page. I suggest in the beginning, sign up for the Essential. It's $14.95, but this is a 30-day free trial. Click on that. It's a 30-day free trial. Click on monthly, right? It's going to say this right here when it's on annual. Click on monthly. Do the 30-day free trial. That will give you custom range bars, right? Because we use custom range bars all the time. It'll give you custom range bars. It'll give you some alerts. It'll give you a bar replay. It'll give you things that you wouldn't get with the free version. Okay. So do all that, and then you will have all the all the resources that you need to start trading, or start indicating anyway with our indicators. Now, I've been trying to separate this for a couple of days, keeping the divergence trades away from what it took to get the goal for the day, but I decided to just put it all together. All right, so I did put it all together, and this morning, today, the 20th day of December, 2024. If you're going to read the spreadsheet, you got to read all CFTC risk disclosures down at the bottom. But today, the 20th day of December, 2024, it took 18 minutes and 5 trades today to get to the goal for the day. At that point, we're up $105 a contract, or $1,260 overall with 12 contracts on. We took a total of 31 trades this morning. We were up 309 ticks on the NQ, 17 ticks on the Russell. We were down 11 ticks on gold and down 15 ticks on the ES. So we're at $1,332.50 overall this morning. On the month now, we're at $10,327 with one contract over 15 business days, averaging $688 per contract per 2-hour business day. On the year now, we're at $122,394 over 238 business days, averaging $514 per contract per 2-hour business day. Okay. I don't need to do this anymore, so I can just not even look at that. So we can get into the trades. Now, the trades that we took getting the goal for the day, let's go hit those first, okay? Because there was today, here it was. Today was a new sheet. Our first trade on the NQ, we'll go back to that. It was just a 4-tick trade. Now remember, when we were getting the goal for the day this week, and I think for the rest of the year, we're going to try to get the goal for the day just using the ribbon trade, okay? So it took a little while today to get the goal for the day because we're just doing it with the ribbon. We were waiting for a trend to develop and waiting for it to pull back and waiting for it to push back in the direction of the trend. But I just want to illustrate something to you guys who are kind of new to this. This is where we got our 4 ticks, all right? Now if I put the context on, it was down close right here. We pulled out of the overbought right here, right? So we had to wait for the down close, and we got 4 ticks profit. Going from here, we sold the close of this bar. We got 4 ticks profit going from there down to here. Now, if you're doing a divergence trade, you would have sold the top of this bar right here. Okay, you would have sold the top of that bar right there. And you would have bought the bottom of this bar right here. Goal for the day right there. Bam, bam. Either one of those would have given you the goal for the day. But doing it with the range trigger. Now, I accidentally had this on the 27 range this morning at the very beginning. I'm just going to go back to the third one, but I'll just tell you, I accidentally had it on the 27 range for a little while this morning. And so it took me a few minutes to realize that. But once I did, I went back to the 31 range. And let's go back here to where I was. Okay, you see I did a lot of drawing on this chart, the lesson plan part of it. And here we are. So we took that trade there. We got 4 ticks in profit on that. Then here we ended up with a break-even trade. Then all the way, this was on 100 range we were looking at right there. That's why those look so huge. All the way over here, we had another break even, then another break even. Then right here is where we finally got the goal for the day. We got 2 more ticks there that got us to +6. All right. I'm sorry, there was somewhere else in there that we got the goal for the day. I don't know where it is, but we had 2 more ticks that we got to get the goal for the day. That was on the NQ. Now, we only ended up with +6 on the NQ, and we had 2 on the ES. So at the beginning of the ES, I'm just showing you where we got the goal for the day. Okay, go back to the beginning of this, alt back. And right here is where we got our 2 ticks on the ES. Okay, and I think that's how we ended up getting the goal for the day, right? We had 2 on the ES and 6 on the NQ. Yeah, so that's no, we had 2 here, and then we got another 4 over here. We had 6 on the ES and 6 on the NQ. That's how we ended up with the goal for the day. All right, that was where we got the goal for the day. Now, even on the ES, if you look at the ES, trading with the this was trading with the ribbon. Okay, trading with the trend with the ribbon. Right here, we had a trade right here, and because we waited for the up close, waited for it to come out of the oversold, and the up close right here. Now, it gave us a couple of ticks profit. However, if we would have just been trading the divergence, we would have started by buying the open of this bar right here, and that would have given us the goal for the day right there. We could have bought the open of this bar right here. That would have given us the goal for the day right there. We could have bought the open of this bar right here. That would have given us the goal for the day right there. We could have bought the open of this bar right here, and that would have given us the goal for the day right there. We could have sold the open of this bar right here, and that would have given us the goal for the day right there. We could have bought the open of this one, would have stopped out, right? We would have bought the open of that bar, and that would have stopped us out. So, but you can see there were 5 times right there we could have gotten the goal just with ES, and that's in the first 6 minutes. You guys see that, right? Do you see it? If you don't know what the divergence trade is, I'm going to get into that now because we stopped trading with the ribbon after that. Okay, so just the ribbon off, and we're going to go through the rest of the ES today. All right, we ended up with the ES overall today. We ended up with -15 ticks. So we had those +6 right there, and then we had another one in here that got us to +11. Then I made a mistake on this one, and I stopped out, brought me down to +1. Then I did this one right here. This was a valid trade that stopped out, and that brought me down to -9. And then I stopped looking at it for a while here, and I stopped out here. That brought me to -5. -9 to -5. Something's wrong with my math there. I was at -9, and then I stopped out, and that should have brought me to -19. And then the stop out after that should run to -29. Okay, so I got to update that. This should be -29. Okay, I don't know how I got that wrong. But anyway, we stopped out there, and that again was my mistake. I think right here we were selling. Yeah, that shouldn't even be a stop out. Right, I didn't do the math wrong. That's not a stop out. That should be a different color. That should be a blue bar. I mean a blue arrow. That wasn't a stop out. We went from -9 to -5, so we got +4 on that. I was going to say, why did that stop me out? That doesn't make any sense at all. We sold the open of that bar. We got +4 on that, so this goes back over here to where it was, -15. Okay. And we were at -4 right there, or -5, I'm sorry, -5 right there. We got a +4, and we ended up at -5, and then we stopped out here. And that was a valid stop out. And we ended up with -15 overall, right? Now, in between all this, the trades that I missed in between here, there was one right here. You would have bought the open of this bar. That was a win. You would have bought the open of this bar. And that was a win. You would have sold the open of this bar. Now, that would have ended up being a win because it didn't pull back 10 ticks. You would have sold the open of this bar. That was a win. You would have bought the open of this bar. That was a win. You would have sold the open of this bar. That was a win. You would have bought the open of this bar. That was a win. You would have, this looks like it probably stopped out. You would have bought the open of this bar, and that would have stopped you out. Right? You would have been in the trade right here, so you wouldn't have gone, you wouldn't reverse the trade that you just were in the middle of stopping out on. Right here, you would have sold the open of that for a win. This looks like it would be a stop out. You would have bought the open of that. And it did actually go up a little bit, so you might have gotten your stop to break even there, depending on your entry. If not, you stopped out. And this one right here, it went from here all the way down here, so you would have gotten your stop to break even on that before it moved up. This one right here, the open was right here, and you would have bought the open right there, and it went about 5 or 6 ticks up before it went down. So that would have been a break even. This one right here, I ended up taking some profit on. That was my 4 ticks. And right here, you would have sold the open of this bar right here for a win. Okay, and right here, you would have bought the open of that bar for a win. Right here, you would have bought the open of that bar for a win. Right here, I did sell the open of that bar for a stop out. And you would have sold the open of that bar for a win. All right, so there's just a ton of opportunity. If you're doing the divergence trades, there's just more opportunity than we've ever had. You know, it works best when it's choppy like this, when it's just going up and down like that. It works best like that. When you have a when you have a decent trend like this, I hadn't really considered or even looked at it, but I was told today that when you have a trend like this, the blacks leading do better. Okay, in the chop, the blue leading is the best. And you can see right here where it started to get choppy, you would have had a win right there, a win right here, a win right here, a win right there, and a win right there, and another win right there. In this junk right here, and all this chop that we wouldn't have had a single trade. We could have gotten the goal 6 times over right there. It's crazy, crazy stuff. Changes the way you look at things. There was one more trade right there, one more right there. This one would have stopped you out right here. This would have been a good one. This one would have stopped you out. This one here would have pulled back pretty good, but then would have been a successful trade. We turned right into a short right there. There was another successful trade. A short over here, another successful trade. A long right here. Now that went just a tiny bit into profit before it turned back down. So that probably would have got you. And right here, that went quite a bit into profit before it turned back down. So that would have been a break even right there if you got in the right place. Okay, that was the yes. There was just a ton of opportunity. And there is on every one of these markets every day. I'm not going to go through every single trade, but I'll go through some of the stuff that I talked about this morning. This was the gold. We ended up negative on gold too, right? We had a +4 at the very beginning somewhere. We had a +4, and then we stopped out there. That put us at -11. And we had a break-even trade there. Now, there weren't a ton of trades on the gold. See, where I highlighted, I put these lines on where I was seeing the trades come. And there was one right here you would have sold. I took a break-even on that. And one right here you would have bought. That would have stopped you out. This is during the break. One right here you would have sold. You would have gotten it back. And one right here you would have just sold right here at the top of this bar. Okay, so there wasn't a ton of opportunity on the gold today. And I had my time frames all messed up from the partners meeting last night when I started up today. So I was off. I was completely off this morning. Everything that I did was, it felt like I was dragging a little bit. We already did the yes. We don't have to do the yes again. Look at the NQ. Now I want to look at the NQ on 100 range to understand what all this drawing is about. Okay. Is this today? Yeah, this is today. Okay, so all the stuff that I was drawing here on the NQ, what I was showing is that in the larger time frame, doing what we're doing with the divergence trades, your entry is down here at the pivot instead of being after you get the confirmation by price action. You get the confirmation that's continuing the trend. The oscillators are good enough and accurate enough so that now you can get it at the pivot, get into the trade at the pivot, and then where you would normally be entering the trade right here, you're probably going to be able to take your hold for the day right in there. Okay, and that's what I was trying to show everybody in here. And the diamond principle still works, and I use this right here to illustrate the diamond principle on 100 range. And you pull back, this was the pivot. Normally you would have to wait for it to come out of the oversold, and you jump on after it comes out of the oversold. But you get in 100 ticks earlier on this. 100 ticks earlier, right there. All right, you get in right there. Like in this case right here, it wasn't exactly a trade setup, but but you would get in when it goes into the oversold instead of when it comes out of the oversold. Right, when it goes into instead of when it comes out of. One of the other things that I had illustrated, you can see the no trade zone is on right here. The divergence trades work great in the no trade zones. So before we wouldn't use a no trade zone and we'd not trade, it'd be a no trade zone. Well, now it's a divergence trade zone. And you can change. This is just a whole different thing. But if you were to, make this a bigger number, or I don't know if you can put a whole number on there, and make the no trade zones bigger. Okay, that one didn't seem to register, so 0.9 now. That doesn't make a difference. Anyway, I was trying to make the no trade zone bigger, but I don't really want to go down that road anyway. I was trying to illustrate that the chop in here, no matter what time zone you're in, time frame you're in, when you get into chop, this thing really excels. Like in here, we would normally not have a trade because you don't have a higher high or a lower low. You get just all this chop back and forth. There's one 100 tick win right there, and just about one right here, a long trade right there. Okay, they would have bought the open of the bar after. It would have been the open of that bar right there. If that were in the oversold, you would have bought the open of that bar right there. Now, one of the observations of one of the guys in the room, who I think is in here today, right now, yes, he is in here today, was that when you get in a run like this, the black ones tend to give you pretty good opportunities. And what we've been saying all along is it doesn't really matter if the black one or the blue one is the one that's divergent. The fact that there is divergent and one of them is in the overbought or in the oversold is what you can trigger on. But we kind of decided that we're just going to stick with the blue to remove the ambiguity between them. And the blue is usually faster. But in certain cases, when you come out of a trend like this, the blue is not faster. The black is faster. Okay, and so that's a great observation that I hadn't really keyed on. But you get into a trend, the black turns into the faster one. Okay, so just come out of that trend, then the black is going to be the one that's going to give you the trigger first. So when it's all choppy, the blue one is one that leads, and when it's not choppy, then the black one is the one that leads. And it doesn't really matter which one you trigger off of, as long as there's separation between them, right? Now, you want to be careful about over trading when you look at it that way, right? Because people have a tendency to get in there and say, well, we had a short right here, and then we had a long right here. So the short would have been from the top of this bar, right? Actually, the short would have been the open of this bar. So that would have stumped you out on the short right there. But the long right here would have been from the open of this bar. So you would have gone from a short right into a long right there. And though there are people who can and do like to trade back and forth like that, I think you gotta be careful about doing that. You end up over trading. All right, that was a lot of stuff. Now on the NQ, we ended up with 309 ticks. I didn't go through the NQ on a trade by trade basis yet, but if we get into that, that'll probably take up the next 12 minutes. But we'll scroll back here and try to get into it. Okay, this is still today, right? All these bars are still today. All right. So bring price down and we'll start going through the trades that we took. Our first trade on the NQ, as I said, was right here. It was 4 ticks. Then we had a break even. Then somewhere in there, we had another one that was plus 2 ticks before this point, I'm pretty sure. We had another one here that was plus 2 ticks to get us to 6. And then we had another break even. Then we had this one here that got us to plus 22. So that was 16 ticks, I guess. Got us to plus 22. Then we had a break even. And we had another break even and another break even. Then we had a 48 tick win right there. That got us to 70. Then I had a trade that I kind of messed up right here. No, that wasn't the one. It was going the other way. I think this should be the other way. Like that. Yeah, where we came onto the oversold right here. That's what it was. And I ended up getting 80 ticks on that. I had kind of screwed it up. I was long 24 in here from some period over here. I think I had left something on. I think I'd left my stop from the short trade that I took over here was still on, and I didn't even register that short trade. But I ended up taking a bunch with both of them. But when I got out of the one that I was on by accident, it actually deleted my target on the other one. So I ended up getting 80 ticks profit on the one that was left running, the one that I should have gotten into. I got 80 ticks profit on that. So that brought me up to 150 at that point. Then we had a break even right there and a break even right there. And a stop out. So there's something else missing here because we went from 150 to 162 to 170. So there's a 12 tick trade and an 8 tick trade missing. And then we had the stop out. That brought us down to 134. Then we had a break even. Then we went from 134 up to 182. Then went from 182 up to 230. Then went from 230 up to 237. Then went from 237 up to 285. And then right here we went from 285 up to 305, and from 305 up to 309 with a break even right at the very end. And that was how the NQ went today. We ended up with 309 ticks. And I missed a ton of trades in there on the NQ. Since then, how much time we got? 9 minutes. Since then, there was a short right here at the open of that bar. That one right there. Right there was a win. There was a short right here at the open of that bar. That was a win. There's a short right here at the open of that bar. That was a win. Going through a short right here at the open of this bar. That was a win. Every one of these wins is like 20 or 30 ticks. A short right here at the open of this bar. That was a win. A short right here at the open of this bar. That was a win. There's a lot of shorts in here. Finally, we have a long right here at the open of this bar. That was a win. Followed by a short right here at the open of this bar. That was a win. A short right here at the open of this bar. That was a win. A long right here at the open of this bar. That was a win. A long right here at the open of this bar. That was a win. A long right here at the open of this bar. That was a win. A short right here at the open of this bar. Now that one, it looks like it went 4 points in profit. If you get in there at 48, it dropped down to 44 and a quarter. Maybe you stopped out on that. That might have been a stop out. After all those wins, you finally get a stop out. That's another win. Right here, the next bar after, that's another win. This is another win. This is another win. Then that went right into a long trade right here. That was another win. And that went into a long trade right here. That went right into a short trade, both of which were wins. Okay, that was a win right here. You bought the open of that. It went about 40 or 50 ticks up. Sold the open of that. It went about 40 ticks down. Do you see this? Let's go to the end so you can see some actual trades. Okay, go all the way to the end. We'll just see some actual trades right here. I can go over all these trades again and again and again, but it doesn't mean a thing until you see it live, right? So right over here, there was just a trade right here. I'm sorry. I missed it right here on the gold. That got, well, just barely got down to the oversold, but you could have bought the open right there on the gold for a trade. Right here, the blue has to lead into the overbought or oversold on these. Right, the blue has to lead, and it's just not leading right now. I don't see anybody asking any questions, but do you all get this? Do you all see it? This is pretty straightforward stuff. Getting ready for a trade right here on the ES. There it is. Going to buy the ES right there, and I just filled, and I'm long, and here it is. Okay, and 4 ticks in profit. We'll bump that stop to break even, and it should go up to right there. Is where it should go. Okay, there's one here on the NQ also. Right, the ES going to break even. The NQ, the entry on the NQ should have been back here. So you would have already had your goal for the day there on the NQ on that trade. And your stop and break even. Sorry. Both of those things were true. Okay, on the ES, we'll lock in a tick, we'll lock in another tick, we'll lock in another tick, and another tick. So that's 4 ticks right there. That was $600 I just made right there. And the NQ I didn't get filled on. But if we did get filled, we would have been trying to get filled right here. Okay, now it's going to sell. It's got a short right there. The NQ does. Right. So I got the short, and here's the short right now. I'm going to lock in. Well, I'm going to lock in a bunch on that. There's 12. So I'm out with 12 right there. 12 times 5. That's 60 times 12. That's $720 right there. So you just saw me make 600 here and 720 right there. And I missed another 1,200 right there when it moved up. I don't know how I could get any simpler than this. There's another one right here on the ES. I should have just gone long right here on the bottom of that bar. See, it's in this chop, and that's perfect. We had opportunity to take profit right there. We had opportunity to take profit right there. We're over here for another sell on the NQ. Okay, now the short should have been from right in here. You can still get into, I think it hasn't gone 4 points into profit yet from 150. I don't think it has. So you can still jump in it right now if you wanted to. Here it is. Okay, stop is going to go to break even right now. Now I'm going to lock in another 720 bucks. How easy is that? And there's another one here on the ES right there. I didn't think I was going to have time to take too many trades, but my stop's going to break even on the ES. Here it is, and it just took me out to break even on the ES. Okay, so I ended up with nothing on that one. But you see, we're in chop right here, and chop is perfect for this. It's exactly what you want. You want to be in chop. And so we're waiting right here for this, right? Waiting right here for this. And you know, David, that revelation about the black line when you're trending, that is something worth looking at. I'm gonna look at that other stuff you had texted to me too this weekend. I'll try to get to it. I figured something else out today. For those of you guys who are interested, I figured something else out today that it involves multiple time frames because I can't do range bars on. No, I can't do intrabar updates. I can't take data from intrabar updates on range bars because range bars only give you data on close. But I can access other time frames when a range bar closes. So I could, when the range bar closes, I could grab the open of the current price, current bid or ask from another time frame, and use it in a formula for the range bar strategy. That's something that I was puzzled, and I figured it out during the break here. I think I figured it out during the break. I don't have to try it, but when my idea, just so you guys know, my idea is at some point to create something that you'd be able to have. Let me show you. It was because one of our guys had asked me to do something we'll do for Lulu. Okay, that was one of the stocks that he was looking at. And if you do this on a range bar, like it's, for Lulu, we'll do it on like a 250 range bar or something like that. So every bar is $2.50. And everything works the same in here. Everything works the same in here. But, to be able to give the entry point, when this gets into the oversold, you want the entry point of the open right here. But with a range bar, you don't know, unless you're looking at it, you don't know what the open is because you can't programmatically get that because you can't get any data from this bar, from the code until the bar closes. But if when this bar closes, I look to another time frame and I say, okay, if I'm on a 5-second bar, when this bar closes, just take the open of the 5-second bar that's current, and whatever happens there within 5 seconds on a larger time frame isn't going to be that significant. So I can take the open of that and use that information. That's what I was thinking. But so you can see right here, the same stuff works. If you bought the open, when this gets into the oversold, if you bought the open of this bar right here on Lululemon at 369.45, and that was today, 369.45, and it ran all the way up here to 384. If you bought an option right there, a call option right there, and it ran all the way up there, that would be awesome. And same thing over here. If you bought the call option down here at the bottom of this, and it ran all the way up there, good stuff, right? You bought a put right here, all the way down there. So something I'm thinking of in the future. And I ran out of time. All right, what was this? Was this the NQ that I was on? Let me minimize it and see. It was the Russell. Okay, so let me change that by. Just there's always like a million things going through my head. And this is the one thing that was going through my head today. All right. So if you have not taken a free trial with us, all right, we just made enough here in this session, made enough to pay for the whole thing. But if you have not taken a free trial with us and you want to take a free trial with us, all you have to do is go here to mytradingiq.com, click on the purple button. It's here. Click on this purple button right here. There's no credit card required for the trial. You guys, if you do it now, you'll get it over the week, over the holiday. You'll have it for a long time if you take the free trial right now. You have the trial for a long time because you have it all next week. And then into the week after that, you end up with it for like almost 2 weeks. If you do that, that'd be great for you. There's no credit card required for the trial. It ends up bringing you to this registration page where all you ask for is your name, your email, your phone number. There are 5 multiple choice questions. If you have Ninja, give us your machine ID. We recommend you use TradingView. We're going to chart on TradingView. We're not charting on Ninja. All right. If you have Ninja and you trade through Ninja, that's great. We don't use your machine ID for that. All right. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne is ready. He's right on the ball today. Usually is.
Here I am. Okay, recap of the morning session.
Today, let me go back. Today took 18 minutes and 5 trades to get to $1,260.
Good job.
Thank you.
Okay, guys, we have covered all the markets previously. Michael coming on. And something we had talked about at the beginning of the broadcast is that price needed to overcome the step line and the 38% fib extension. And then we got a conglomeration here. We got the BBC. The pullback holds more often than not. We got red and falling. That's bearish. You got the bottom side of this trend line. You got the 50% fib extension. So there's a whole lot of stuff. Markets have to be, the institutional traders got to be real bullish to move us through all that resistance. Each one of those alone is potential resistance, just as this was potential support last night, and we pointed out in the workshop. So if you're a member and missed the workshop last night, it was in the beginning of the workshop where I did this and drew in this, and then price after the workshop came right down to that point where the step line crossed red and falling, turning it to blue and climbing, and when price came back to that very spot, we found good support and got quite a bounce. So we opened here, traded all the way down to here, and that support bounced us all the way back up to the 38% fib extension. So we'll find out by close of business today if this pullback is just a pullback and a continuing uptrend, or if in fact the 38 has become the new resistance. At the close of trading today, which is 4 for stocks, 5 for futures, that's PM Eastern. If you've got a huge wick and end up with a doji or even some red, that's really bearish. And you should be on guard for that Sunday night. If, however, we close up in this area, I don't think we'll make it through all that today. I'd be very surprised. But you got to embrace all possibilities. It could happen. If we trade through all that resistance, then the next major resistance is at the 62% fib extension. This high, this high, this high, and the all-time historic high. Once you learn how to read a chart, you'll never be lost again. And remember the purpose of the Logic 247 alerts. Over the last 333 weeks, we've issued over 18,700. We've averaged on a weekly basis 20% or less being stopped out. Again, based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. And the recap this morning that Valerie did at 6:30 a.m. Eastern, this is where we stood for the week. There have been additional alerts since this recap, so she'll wrap it up for the week this afternoon or tomorrow morning. But from Sunday night at 6 p.m. Eastern, when the markets open for the week, through 6:30 a.m. this morning, we issued a total of 58 alerts this week. 2 never triggered. We were still waiting on the outcome of 8. It gave us 48 actionable alerts, of which 3 or 6% would have been stopped out based on market structure. And that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, to become a member, it's pretty simple. Send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, your phone number. We're not going to call you. We don't have a phone room. We don't have a sales department. But we will send you an email that explains all that it means to become a passport holder. And there'll be a link you can click if you decide what we do is right for you. 2 hours of live training every trading day. On top of that, private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you'll own as a passport holder, are fluid across all markets and all time frames. Futures, individual stocks, crypto, Forex, ETFs. It doesn't matter because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. You'll also get the Logic 247 alerts around the clock. You get the concierge trade alerts every evening the second they're published. Every Monday morning, 6:15 a.m. Eastern, you'll get the weekly trading zones, which are now 15 years old as of last Saturday. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And for members that are tuned in, it was a good workshop. If you missed it, you just might want to go to the channel, the Telegram channel, and check it out. Okay? Everything a trader needs, all under one roof, one low price. Plus you get the golden key that unlocks all the private channels in Telegram. One of those channels happens to be a weekly workshop channel where you'll find hundreds of previous weekly workshops. Do you need to watch them all? No. It's nice to know you got that information, all those teachable moments at your fingertips. But really, all you got to do is just show up for class each morning. Trade along and ask every question that pops into your head. Now, you don't start trading live day one. You have not learned the strategy yet. The 2420 blueprint spells it all out. You need to put together 10 consecutive days in a row in Sim where you reach your goal in 10 trades or less before you even think about going live. But once you accomplish that, the blueprint will give you the green light to go live with one contract. Now that contract is going to be funded with your startup capital or money you use to open your account. Your goal, now that you're trading live, is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is that you're adding the second contract with profit you earned in the market. The blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. It's called the 2420 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. So 2 points a day, which is your goal. Well, when you first start out with one contract, it's $100. Nothing to write home about. But you're building a business. You're not trying to get rich quick overnight. You're building a business. And it takes time to build a business. But once you've earned the right to trade 10 contracts, those same 2 points in the ES, or 10 ticks in crude, or 10 ticks in gold, it's now $1,000 a day. That puts you in the top 3% of wage earners worldwide. But you have to have the discipline to follow the blueprint. If you follow the blueprint, it makes it far more difficult to blow up another account. It's not impossible, but you will have to break some rules. Let's wrap it up with our good word for today. Also on our YouTube channel, there are over 2,700 daily episodes just like the one you just watched, archived for your educational and viewing pleasure. And thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, and really get to know us, see how we've evolved over the years. Yesterday, our good word for the day was the bottom line on money. Today's good word is really a question. Do you have an attitude of entitlement? Galatians 5:13. By love, serve one another. Do you have an I owe you attitude or a you owe me attitude? What gives us an attitude of entitlement? Well, it's actually found in the middle of the word entitlement. Title. We assume people owe us because of the title we hold in their lives. Wife, husband, mother, brother, daughter, friend, pastor, donor, employee, boss, etc. We think of our title as a title deed that gives us the right to whatever advantage we expect. Paul described the essence of discipleship in these words. By love, serve one another. If you have an attitude of entitlement, here are some strategies to help you overcome it. Number 1, understand the difference between your rights and your desires. You have the right to expect your husband or wife to be faithful to you, but you do not have the right to expect them to wait on you hand and foot. John 3:16 says, For God so loved the world that he gave his only begotten Son. True love is marked by giving, not taking. Number 2, live by the golden rule. It's in Matthew 7:12. And I'm not talking about the world's golden rule, which says he who has the goal makes the rules. Jesus said that whatever you want others to do for you, take the initiative and begin doing it for them. You say, but what if they don't return the favor? Doesn't matter. God will reward you anyway. He will not forget how hard you have worked for Him and how you have shown your love to Him by caring for other believers as you do. Hebrews 6:10. Never assume that a person's past kindness creates an ongoing obligation to you. God may use others to bless you, but He alone must always be the source you trust to meet your needs. James 1:17. And that, my friends, is our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.